Friday, April 28th, market analysis, Stan Ehrlich. Well, a third of this year is up. First 4 months. This is the last trading day of April. So we've got a challenge of significant recent rally highs in progress today and most of the day, in particular, the last hour or so. You can see on the left here that the S&P SPY spider has jabbed up against the 415 level, which is a significant on the daily chart here on the right. And by the way, you can reach me at info@ersignals.com. For the resistance area that I put in a light red, we banged against it a couple of weeks ago on the opening and closed poorly, which started a downside correction, which made new lows for the month. Only 2 days ago. Now, in 2 days, we've rallied a bit more than 10 points, and we are right back up to the highest levels we've seen in many months. Closing above the mid-April highs is going to be a new high since February 6th, and above the February 6th high, which is not much higher than that at 418.5. That is going to create a new high since August of 22, many more months, perpetuating what I've said all along. We're in a bull market of 2023. I was trying to catch a downside correction, which is still not out of the question, although it certainly doesn't look like it. We are now at this very moment challenging the high of the day and the high of that resistance, and we may, while I'm giving my little market analysis for today, even see new highs. Let's look at the DIA. So I'm basically bullish, but I expected it to come down to 97, 96 area to close a gap. It only got down to 403. So I needed another 6-8 points to do the job, and it didn't do it. Now I'm concerned that that was the effort to close the gap. And I've said many times, gaps are almost always closed, almost always. We've seen many gaps in the months that I've been doing this, and in my 52 years, closed in a very precise, predictable manner. This one appears like it may not happen. No money lost, just we're missing a buying opportunity, apparently. I'm not through with that. Just because we're high and last doesn't mean it won't turn back down, although I need to see, obviously that's starting to happen. Getting below 414.30 would be a very small start, and actually getting below 412.30 would be a lot better, and that'll be a couple more points. It's not like we're skyrocketing here. We're up $2.80. That's not a heck of a lot. We've seen lots and lots of days when you're up close to 10 or even over 10 points in a single day. Yesterday, you were up, I think it was 7 or 8. So this strength is coming back in, and volatility is coming back into the market, and we just might see a major upside breakout here at the end of this month. Now, let's look at the DIA. We're getting, as you would expect, similar circumstances. The DIA would be a new high close since February, and is about to, it seems, to make a new high since the middle of February, which would certainly, under normal circumstances, be bullish. And under these circumstances, I agree. We're not close to overbought. I'm not seeing a double top yet. All I'm seeing is a little bit of an unexpected strength for yesterday and today, and I still have gaps to close under the market. So we could develop into some kind of a top, but I wouldn't jump at this point. This is very much a limbo point. Are we going to have an upside breakout closing very strong, new highs for many weeks, or is it going to fail right here? Let's look at the QQQs. Remember, they have been stronger on the average since October 13, major bullish turnaround, the end of the bear market of 2022 and the beginning of the bull markets starting October 2022, but the bull market of 2023 we're involved in. Again, the first third of the year is about to go bye-bye. And we're at the highest levels, or almost there, very, very close in these indexes since last August. So that perpetuates the expectation of higher levels. We've got higher lows and higher highs in general since October. The key here is to be able to pick rally highs on a short-term basis and how much of a downside correction is going to occur and try to buy those downside corrections. I hate buying overbought conditions. I don't. And breakouts oftentimes, but not always, lead to overbought conditions. And I do agree you can have another day or two worth of follow through, but it's very risky doing this kind of things if you unless you have a very, very tight stop and watch very closely. Okay, so that's the cues. They're about to do the job, or they have started to do the job. I think it actually did make minor new highs here. Yep, it did, for many months. We have in the cues new highs since August of 22. Period. Okay. On the surface, again, this does not look bearish, but take two alternatives. Stay here, well, three alternatives, and close right here. Get stronger and pop up even more. What's going to happen then? You're going to get bullish breakouts, new highs for greater periods of time, et cetera, and not overbought yet. Or everything fails. We've got still over 3 hours to go, and you can end up getting significant reversals, bearish reversals. I don't think it's going to top the market out for any major length of time if that happens, and I'm still looking for those gaps to be closed. And the Qs did close part of its gap at the early part of this week, so it tried. Let's go look at some futures contracts. We got some new things happening here, two of them, and we'll get to them in a moment. The E-mini, like the spider, is pushing for new high closes and new highs and highest highs for at least since February. But those February highs are not very far away, and they're very close, so they could be broken even today, but it doesn't seem likely. Next chart. Bond futures have a bullish engulfing. They're nowhere near oversold, but a bullish engulfing all by itself is supposed to be bullish. That's why they call it a bullish engulfing. So I will not be surprised if we start to see it push that 133, 134 area again, and maybe have a bullish breakout to the upside. That could help the stock market maintain strength and push it even higher faster. 10-year notes. Same thing almost, but we're not higher than yesterday's high, so we don't have a bullish engulfing. Could still happen. We won't get an official ER green buy signal, but I like the way it looks, and I'm claiming for weeks and weeks now that the interest rate futures are building major long-term bottoms. Next chart. Crude light. You might have a bullish engulfing, very, very close. We came very, very close to being oversold. And the gap that I was talking about weeks ago, frankly, when it happened, probably started talking about on April 3rd, beginning of the month. And it banged against resistance, got overbought a couple times. We had a bearish engulfing in there, but that didn't work as accurately as I like. It just didn't work, period. But we did come down, close the gap a little bit more 2 days ago, Wednesday, and start to go up a little bit yesterday, and we're going up even more today. So we closed the gap and we got oversold or extremely close to it. And now we're starting to rally. So This might be the beginning of a move that will clear resistance that is at 83. That would be quite bullish. We'll see what happens. Next chart. Natural gas. Don't have too much to say. Kind of dribbling around sideways, hanging in there, lost downside momentum, going sideways. Next chart. Gold, silver, and platinum. We caught the bottom of the market back at the end of February in all three of them. But now they're having problems. And they started a few weeks ago in the gold market. It looks like it's developing a top. Momentarily, I'm neutral, waiting for some signals here and or a breakout. Next chart is silver. Got the bottom of the silver market and it took off like a bat out of hell. And we also have a bearish engulfing at the top so far. So momentarily I'm neutral and I really can't make a good decision at the moment. So I'm going to keep my mouth shut. Platinum, we got the bottom, of course, and we also got extreme overbought conditions at the top, which I talked about the days they were happening. So I'm not surprised to see it have a correction here, but the trend is up on a longer term basis. And I think we're going to attack the recent highs. Next chart. Live cattle had a bearish engulfing that's not working. The strategy, the way it works, I would be flat by now. I would not be in a position. We still pick the second highest high for the rally on the bearish engulfing. And if it starts to make lows under 162, then I'll become bearish, but I don't have a position at the moment. Next, high grade copper hit support and got oversold at the same time. Perfect recipe for a rally. It has not rallied very much yet. Yesterday, it did make that lower low and a higher close. No bullish engulfing, though, so I didn't get a green bullish ER buy signal. We are steadied a little higher at the moment. No big deal. But I think there's a good chance for a little rally back up to maybe a little under 4.2. Next chart. Soybeans have a bullish engulfing today. It is a brand new, as of today, bullish ER buy signal. I think it has enough zip pop bang to go up to at least 1457, maybe 150234 area to get back up to resistance and challenge those recent rally highs. I like the bullish engulfing. I'm going to be trying to buy it in the next few days with an ER3 order, but ER1 is now long as of today, about where the market is trading right now. So we'll see how this develops. Of course, I have a protective sell stop at 1396 and 8 2/8 quarter. Next chart. Oversold in soybean oil, expecting a little bit of a rally. Next chart, but it's a bear trend. Corn, expecting a rally, oversold for 2 days, came down to support, and it's now higher on the day. It's dropped quite a bit, actually, in the last week and a half, including a bearish engulfing sell signal, which worked very nicely. So I'm expecting a bounce. Next chart. Wheat, oversold, expecting a bounce back up to resistance, 670-ish. Next, soybean meal, oversold, expecting a bounce up to some resistance. Similar situation, a lot of grains. Hogs, we got the bottom. We bought it a few days ago on an green ER buy signal, April 21st. ER1 is long from about 85.90 and just a tiny bit above that 86 or so. ER3 is long. Both of them have bought it into this buy signal. I love it. This is exactly what I've written the code for, or my helpers have written the code for. I'm not a coder, I'm the developer for it. Next chart. OJ. Nah, not much of a comment. Sideways bull trend, looking for a buy signal probably. Cocoa. Not much to say. Bull market, neutral territory. Trend is up. Trade with the trend. Trend is your friend. Sugar, way overbought. Unbelievable maintenance of overbought levels. Keeps on going up. won't turn around. I can't get a handle on a good short sale signal yet. Next, heating oil. Bullish engulfing. Today is the first day for a brand new buy signal, and it is very accurately at a significant support area. Plus, we had a buy signal, didn't work a couple of days ago, but these things cluster sometimes. Here's another example. In a 4-day period, we had 2 bearish engulfings, and it was the top. The first one, the highest one, did get the top of the market. Here's 3 of them within a month, and that's about the time frame I typically talk about clustering within a 4-week period. And we ended up getting good sell signals on the average, but it wasn't the highest high. And we're back to the E-mini. So that's it for this week and this month. See you next month.